Hey friends, welcome back to the video. So right now we will talk about position sizing and why I actually shift this all the way up to the top of the video list, and I need you to listen first. The reason is because most of you has been added into the Discord group, and once you're in, what's the first thing that you will do? Most likely scanning through all the group chats and seeing what positions am I holding, what am I buying, all that, right? If the stock price is still near to my entry price, you might decide to get into the trade. Okay, that's why I'm okay that you can follow along, but I need you to understand how to calculate your risk. Okay, so we'll dive right into the very first example over here. So based on the last video, we talked about that most of the brokers, they actually give you a leverage of roughly about 1:2 if you are using Momo. If you are using Interactive Broker, for day trading, they will give you 1:4. The next day, they will revert back to 1:2. So just keep it at 1:2. And let's say, for example, you have a starting capital, or that's your total principal amount that you have inside your account, which is $10,000. And how are you going to calculate, like, what is your percentage of risk and how many shares are you going to buy? So let's say, for example, you are doing a swing trade. Swing trade, usually I risk roughly about 1% per trade. So based on that, right, when you're calculating your position size or how many shares that you want to buy, please, guys, don't ever count based on the leverage that it gives you. So let's say, for example, your starting capital is $10,000. You calculate based on $10,000. Don't calculate based on $20,000, okay? Because if you do that, you are risking more than what you are supposed to risk, okay? So we scroll down here. So let's say you are risking 1% of your total account capital, and you want to know how much is 1% of your 1% risk, right? You use your $10,000, you times 1%, which comes out to $100. So for every single trade that you take, if you take a loss, you are only going to lose $100, which is equivalent to 1% of your account. Then whenever you take a trade, there's three things that you need to keep in mind. There's entry price, stop loss, and take profit. Okay? For example, you set a stop loss at $95. So from your entry of, let's say, if you buy at $100 and set the stop loss at $95, right? So from $100 to $95, you know that your stop loss distance is actually $5. So how we come out with this figure is 100 minus 95 equals to $5 per share. That will be your stop loss distance. And then if you want to know how many shares can you buy, okay? So you simply use your 1% risk, which is also your $100. So you use that $100 divide by your stop loss distance of $5 over here. So 100 divided by 5, you can buy 20 shares. So let's say, for example, this stock, right, you bought at $100 and then it drops all the way down to $95, which it can actually trigger your stop loss, and that's when you will lose $100, which is actually equivalent to 1% of your account. Understand? So far, so clear? I hope this is actually not too complicated. If it's too complicated, later on I will show you two more examples on how you can calculate your sizing automatically. You don't have to know like the math behind all that. Okay, so once you know that every $5 move is actually equivalent to $100 based on that 1% risk of your account, right? So let's say, for example, the stocks you enter at $100 and you move all the way to $115. How much will you be making? So every $5 you make 100. The stock actually move $15, right? So that's like 3 times your risk. So you will be making $300. So over here you can see for every $5 movement in your favor, you will make $100. And since the stock price increased by $15 from your entry of $100, which is 3 times the amount you put in, 3 times $100, you make $300. Okay, so this is, I believe it should be quite simple. If you still don't understand, you can read through this PDF file. I try to break down as simple as possible so that you can know exactly how you are going to calculate it. Okay, if you still don't understand, no issues. I show you over here. Most of the brokers, right, when you log into your account and then you go into the orders tab, they have all these very, very similar functions like the symbol, the sessions, order type, price. So what should you do over here? If you are a total beginner, the first thing I will recommend is that over here, as long as you see there are all these drop down button, right? Click into them, screenshot. After you screenshot, I will ask you to download this app called DeepSeek. It's something similar to ChatGPT or Perplexity AI, but then DeepSeek is totally free. So you screenshot already, you paste that screenshot into DeepSeek. Then after you ask them to explain what is all this, the drop-down list, all those sessions or order type, what are they, and explain to you as if you are a total beginner. They will give you all the breakdowns, how to use all these, certain orders for certain type of different type of trading. Like let's say for the session, right? Session, you have regular trading hours, you have outside of regular trading hours, you have pre-market sessions, and you also have 24 hours trading sessions. So all that they will explain to you, and you will know exactly how to use that in each different type of trading sessions. Okay, so from here back to the topic, I will teach you how to use your broker to automatically help you to calculate a plus minus figure, how much is your risk. So most importantly is that you select the ticker symbol that you actually want to trade. So for example, over here, you can see that NVDA is the ticker symbol for NVIDIA. NVIDIA is a very, very popular stock. So I believe most of you should know this company, right? Then after that, let's say for example, because currently the NVIDIA price is trading at roughly about 141, 142 area, but then for example's sake, we don't use 141 or 142. We just entered the price at $100. Let's say if you want to enter NVIDIA at $100, and then the next thing you have to do, right, is go down here, saw this attached order, open up, select bracket, and then these two bottom function will actually automatically appear. So once it appear already, so same as our example above, your stop loss, you enter at $100, your stop loss is $95, your take profit is $115. Okay, $115. So what you do next is that you go back to this quantity area. This quantity, right, just key in any random figure. Okay, you can key in 20, 30, 40, 50, 100, up to you. Okay, once you key in a random figure over here, come back, just click on the stop loss. Click inside here. The moment you click into it, it will show you this estimated loss. So from here, you can see that I entered the quantity of 20, and then the estimated loss is actually $100, which is equivalent to 1% of your account, and which also means that you are risking $100 for that trade. So if NVIDIA from $100 drop all the way down to $95, you are going to lose 1% of your account, which equivalents to $100. Okay, so you can always put your entry price, your stop loss price. So your entry price over here, your stop loss price, your take profit price. Then lastly, you go back to the quantity. You can just key in any random figures, then come back again to your stop loss price so that it will actually show you this estimated loss. And from there, you will know exactly how many shares to buy. So on this quantity, right, you'll know how many shares to buy to actually fit into 1% risk. Okay. So the next example over at your right. So if you were to key in 20 quantity, then after that, you look at this take profit area, because our take profit, the price is actually $115. So from here, you can see your profit is actually $300. So you are risking $100 to make $300, which also known as 1:3 RR. 1:3 risk to reward. Okay, you'll hear that very, very often from now on. Then I give you another example. So with all that in mind already, I believe by now you should be able to know what to do. So the very first thing is to key in any ticker symbol that you like. And right now we are going to talk about the 2% risk. Okay, so after you key in the ticker symbol, and for example, NVIDIA, you want to buy at $100. Okay, same thing, your stop loss is $95 and your take profit is $115. And right now you're going to do 2% risk, right? So 2% of 10,000 is actually $200. You are going to risk $200 this time round. So over here, if you randomly key in 40 shares. So if you key in 40 and then you go back to the stop loss area, once you click on it, it will show you this estimated loss of $200, which also is your 2% risk, which equivalents to $200. So that's how you can easily know how many shares to buy. Okay. Then after over at your right, so because your take profit is actually at 115, so your profit is actually $600, which equivalents to 1:3 RR. Okay, 1:3 risk reward. So you are risking $200 to make $600. If this is still not clear to you, and especially you are someone who use Interactive Broker, right? Interactive Broker doesn't have this function. So what can you do? Go to this website called UFeeds. Okay, over here, once you reach into this website, this is the default settings that you will actually see. So firstly, very first thing is that you key in $10,000 and then your risk is actually up to you. For swing trading, usually I risk about 1%. Sometimes for you, if your account is still a little bit small, you can choose whether you want to risk 2% or not. But if you were to use risk 2%, you'll run out of margin pretty quickly. Okay, because normally the way then when I do swing trading, my stop loss is quite small, so you will be able to open up a larger position size. I show you, let's say if we were to risk 1%, then your entry, remember, it was $100 and your stop loss is $95, right? And remember, your reward is actually 1:3. For the fees part, just put it 0, slippage, put 0. Okay, for these two, simply just change to 0, don't do anything around here. Then after you click on calculate. So the moment you click on calculate, what are the important things that you have to see here? The 20 shares, which means that if you have an account of $10,000, your risk is $100, and based on your entry price to stop loss distance, right, you can buy 20 shares. Okay, these 20 shares will actually use up roughly about $2,000 from your account. Okay, so you can see $2,000 is equivalent to about 10%, including the leverage already. So from here, if you increase this to 2%, then after you press calculate, you will see that you use about $4,000 of your 20,000, including of leverage. So you will run out of margin really quickly, and you won't be able to buy more shares from there. So if you're doing swing trading, do try to stick to maybe about 1%. So 1%, you can open quite a lot of different types of positions. Okay, from here, the rest of these, thing about like what gross stop loss or slippage, these are all not important at all. What I want you to do is just to understand how many shares that you can buy. Okay, then after you just key in your stop loss and take profit, you should be good to go. So along the way, if we manage any positions like taking off partial profits or that, as we go along the course, I will teach you how to actually do so. Okay, so if you have any questions, feel free, to type inside the Discord group. People over there, they might help you. If nobody help you, I will come in to help you. Okay, see you. Bye bye.